after 3 days of losses, US markets did see some green, and that is translating into the cues for Asian markets as well.
The GVA, the gross value added, which is really the actual measure of the extent to which the economy grew, that came in line at 6.5%.
Bank Nifty it saw a positive close yesterday. It should break, on the upside, it should break the highs of 46,754.
This particular move indicates that L&T can now go ahead and do product level integration as far as green hydrogen projects are concerned.
If you run it efficiently, I think you can get at least but 10% to PBT to sales of 10%, I think it is achieved.
100 points on the Nifty, straight off the bat. 300 on the sensex nearly is what you have.
What the RBI is doing, I think all points to lower, bond yield.
In case of Cohance, they have close to 32+% of EBITDA margin.
I think you will see that gap between the very strong, particularly public capex and private consumption narrowing.
22,304 is the new high on the Nifty.
Bajaj Auto's numbers were very strong, an indication that two-wheelers are picking up quite a bit of pace. Markets too in a Friday mood, higher by the minute.
Okay, well, that's the day so far, but it is absolutely spectacular. What can we say? It's a Friday to be remembered. 300 points on the Nifty. You'd wonder, well, what did we wake up to? Global cues were positive. Things were looking quite all right on that front. But a 300-point move, I don't think very many people saw that one coming. In a single session with this gain, the market basically on the Nifty has taken out the range for the last 6 days. That's what we've done today. This is, of course, Closing Bell. We'll talk about markets and more. With me, my colleagues Surabhi and Nigel. And we have our guest here in the studios as well, someone from Goa. We'll keep it a suspense and keep him out of the camera for now. But guys, hi, good afternoon.
Hi, good afternoon. I think some of our viewers must have guessed because he's our Friday favorite guest because he mostly comes from Goa. So we start getting that vibe.
All right, there you go. Prakash, hi.
So you guys don't come to Goa. I need to bring Goa here. And today the party is on D Street anyway. So
as Prakash saw market opening, he said, boom, boom. That's the time. Sat in the flight. I saw a couple of bodyguards coming with him. He said, I need to be part of this. Thanks, Prakash. Good to see you in. And,
likewise.
And a good day for the markets. But we're not done, guys. Remember, tomorrow there are 2 hours of trading.
I was going to say the last hour of the week, but no, it's not. 2 more hours to go tomorrow. But, just a few points, right? We've taken out, as I said, it's been 6 days, the range is gone. You could look at all kinds of things, but the fact is the price action is essentially ultimately the decider. The Nifty Bank with a very strong 2% kind of a pop today is also almost back 300 points away from the last swing high, which is 47,363. Few times we've gotten to just under those levels in the market. The Bank Nifty sold off. So let's see. Small caps and mid caps, they're underperforming. At least doing lesser as compared to the large caps. So 0.5% to about 1% gains. And advanced decline is better than 2:1. So it's not wild in terms of broader markets and what we're seeing there, but it's very, very nice and comfortable. Of course, the star is Nifty today.
Absolutely. And Prashant, I think this week is important and today is important because the Nifty has now said this to us not once but twice, that dips are getting emphatically bought. So I just kind of want to jog my own memory. If you pull up a 3-year chart of the index, the market was cruising along right through December. The first shakeout happened around the 20th of January. And that's when we had, this big fear about whether there's a correction starting or not. Guess what? 4 weeks and it was answered with another all-time high. That's when we had the close above 22,200. That's today's chart. We should pull up a 3-month chart to kind of illustrate that point, how the dips are getting bought with a lot of conviction in this market. And we had a fresh all-time high. As I said, 20th January was the dip, 20th February was another all-time high. And now even before the month sort of closes out, or the 1st of March actually today, we have yet another level, and this time it's 22,300 plus. Having said that, the mid-cap space is something that perhaps one needs to watch because there's some caution here, and maybe it's just, exactly what the doctor ordered. Because for the week as a whole, the indices are positive. The Nifty is up about 0.5%. Bank Nifty is doing even better, almost 0.7% higher. It's the mid-cap index that is still sitting on a 1% cut for the week. The small-cap index is sitting on a loss of about 0.5% or so. But I guess all in all, the mood is very, very buoyant. And Nigel, maybe, the little bit of a mid-cap cool-off that we've had perhaps overall it will be seen as healthy.
Well, it'll be healthy, I'm sure. Metal stocks actually today are up and about. The Chinese data is still not looking too good. So I think the street is reading this as maybe there'll be more stimulus in China. If that happens, it's good for metal stocks. So I guess that's one of the reasons why these stocks, after seeing some bit of correction in the last few sessions, all of them have bounced back in style. But Prakash, let me come across to you. What about these metal names? They're giving you making you skip a heartbeat off and on. SAIL, it was at 145, it corrected to around 120. And from there, it's bounced quite well. Today, it's doing very, very well as well. What's your pick of the pack? JSPL has always been valuation-wise the cheapest one in there.
Yeah. No, I think today's move on metals, Nigel, seems to be more predicated on the overall GDP print. I think it's more to do with saying we continue to do well while China has its own share of struggle and all. And remember one thing, the new capacities that have come in globally, all of them, a majority of them happen to be with us. So it's the kind of pricing power, if it comes back, if China is going to be continuing to struggle. And look at where ores are priced, so it's very clearly a precursor to a demand in terms of steel output going up. And if we are to contribute even from a market share perspective slightly better than what we did traditionally, I think our companies will start having great return ratios, which has been a bane of sorts for all the capex that's been done in the last few years. Tata Steel continues to be, we've spoken about this ad nauseum, but I think today it's reached a stage where it sets itself for a new band. So this is exactly what happened to some of the other names in the Tata group. You'll be surprised. Today, the stocks that are moving, so I'm deviating from metals on your question, but stocks that haven't moved or haven't participated are the ones that are picking up pace. Whether it's a Tata Chemicals, whether it's a Page Industry, whether from the pharma pack, it's Spark. So all of this is the list that hasn't, it's just almost like, people have chosen stocks that have not done well in the last couple of months and saying, let's work on these. But, it doesn't take time for the market to change its mood. You saw what happened to Hindalco after the numbers. And look what reports are coming today. And certainly the love is being, renewed in terms of what they could do with all these so-called negative news flows. So I think it's the economy, at the end of the day, the earnings capability which finally prevails. And from that perspective, my sense is Tata Steel continues to offer huge value, especially after all those companies that have got into the stable and help them increase margins cyclically from a more diversified product mix.
By the way, Nigel, have you heard anything for them to move today? Any news flow?
No, that's what I was asking Prakash.
Prakash, anything? For this move, suddenly out of the blue, 5%, just rotation into some of the underperformers.
Absolutely. You'll have the same thing in cement also. So there's no specific move on cement, but look at how some of them are perking up, the larger ones. So it's about the government's ability to spend and, how this could continue. It's non-secular moves that are becoming secular, in that sense.
It's interesting the way the markets read the Chinese data as well. Yeah. When it's weak, they say they're going to put more stimulus, and that's why, the metal stocks will move. And when it's strong, they're saying demand's coming back by the metal stocks any which ways, So I guess it's a bit of a global play that's taking place today in terms of read-through, and some of these stocks had seen a correction. But as we mentioned, in December itself, that this could be the year for steel, because spreads were getting compressed, but very fact that India has a lot of its iron ore, and India's iron ore is relatively cheaper in comparison to the globe, and we have some backward integration. That's what will help India stand out. And I remember I put out this piece, whether it's a bull of steel or a bear of steel. At that point of time, things are looking weak, but a bull of steel could show up in 2024, and it appears as of now, looking ahead, I think that's the reason why some of these stocks, because ferrous is outpacing the non-ferrous stocks in today's session.
Okay. All right. No, absolutely. Good points there. 340, by the way, on the Nifty, and things are looking pretty solid all around. Prakash, we had the management of CG Power with us in the morning.
Yeah.
And we spoke about the chip packaging plant, which is going to come up in the next 3 years. Again, they got a finger in lots of pies, right? I mean, not just one, but...
Yeah.
And all of them have been doing well because of this big thrust from infrastructure spending by the government. What's the view on the stock?
No, I think this only kind of gives it more wings, and what they're looking at getting into is very doable. It's not something which is too ambitious that you could kind of write off and say nothing's going to happen on the chip value chain. They're talking about something which definitely we could do. They have the balance sheet to back that up. And interestingly, all the other products, they've not relied too much on any one segment. If you actually see their segmental revenue, it's so well distributed. It's remarkable how the company's transformed itself from a difficult spot to, coming all the way here. I think the change of management, the kind of outlook, all of that drives these things. We are very positive, and the institutional holding that backs it also makes sure that you really don't have much of a drawdown in case things don't look up for this segment. But overall, the segment itself is so promising, whether it's transformers, whether it's transmission equipment in some other form. In fact, I spoke to a couple of transformer companies recently post the earnings, and they actually don't have capacities. They're running short of just space in the shed to manufacture more. So there's so much that's happening. I don't see any reason why. Of course, valuations will always kind of vacillate between the narrow band that most of these companies did. But the institutional holding backs this up in terms of any kind of shocks that you might get.
Okay, and I mean, semicon is a huge buzzword, and here's a company that seems to have a plan to back the buzz.
Yeah.
And I guess the market seems to really like the sound of that. Let's quickly move on. We need to get some trading strategies going as well. We have Mitesh Thakkar joining in as always. Mitesh, hi, good afternoon. It's a green afternoon. So tell us your sense on the indices, whether you're still comfortable with opening fresh longs now. And on sale, I remember you had a long trade going on sale in the afternoon. So word on metals as well, please.
So I think Surbi, one, Prashant was saying this, if you would have asked anybody about a 300-point rally today, I would have been emphatic. I would side with an emphatic no on that, and I wasn't expecting a breakout. But once we started getting past 22, 250, 260 zones, I think the indices opened up further upsides to 22, 500, 600 levels. So in that sense, longs over there. And metals, yes, I think, we had a buy on Tisco earlier and then sale in the afternoon. I think the entire pack looks very strong to me. JSW Steel has had a good breakout. The only thing is that you would want a fresh entry point in case you want to take positions now. But otherwise, the pack looks very strong in the short to medium term, and from a trading point of view, enjoys good momentum. So I would maintain my longs over there. In fact, I have NMDC as one of the recommendations right now. Buy with a stop at 328.5, look for targets of 245. And banks have reversed, from oversold levels. So Kotak Bank comes on the radar. Recommend a buy here with a stop at 17.05 for targets of 17.60.
Okay, all right, got that. Thank you very much for all the trades. Mitesh, will come back to you in a bit and try and get some more. I think we also have now Ekta joining in. She's tracking a couple of stories. Dr. Reddy's has been named a defendant in a complaint that has been filed in the US District Court. Now, Ekta is with us. Ekta, I'm not sure what is this complaint all about and what is happening with Reddy's?
Well, this complaint is with regards to Revlimid generic. So basically, Walmart and a consortium of other companies, pharmacies included, such as CVS, have filed a lawsuit against Dr. Reddy's along with other companies which have launched the generic version of Revlimid in the US markets, claiming that there was unfair competition. So Dr. Reddy's is a part of the larger litigation which is taking place, which includes the likes of Natco as well as Celgene. These are the generic filers, or Natco as well as Dr. Reddy's are the generic filers which had settled with Celgene in order to launch the generic version of this particular drug. So they can sell only volume limited versions of this particular drug until 2026 Jan, after which it becomes open in terms of no volume limitations. Now remember, it's an $8 billion drug. It's a blockbuster drug in terms of revenues, what is generated for the entire Indian pharmaceutical space in the past 3 to 4 quarters, and Dr. Reddy's has benefited from it. These kind of litigations are normal course of business where, the likes of Walmart, CVS have indicated that there was unfair competition when it came to it came to this particular drug, and the settlement terms were obviously unfavorable when it came to generic competition, and there was a stoppage of generic competition, unfair generic competition coming in, and hence you can see the stock way down because nobody knows what will happen with the litigation going forward. Generally, what happens is that there are settlements which take place. Maybe a percentage of profits of the sale of the drug is what is paid in terms of settlement charges, or otherwise it goes till the end and it's fought. It's taken, the legal recourse is taken. This drags on for many years. Generally, that's what we've seen. So let's see what happens. It's an overhang because it's a blockbuster drug, so the stakes are high.
All right, Ekta, thanks very much for that. Stock's down about 3%. Appreciate you getting us all those details. The other one, which is also moving, but on the other side, is L&T. 5% move on the largest infrastructure name in the country. That's a big one. Now, there are, of course, a couple of triggers. There's a large order which sort of, I think, came through, I think, about 30-40 minutes back. There is that electrolyzer news as well, which has been commissioned. But beyond all of that, the big tailwind, of course, is the very strong investment growth, which the GDP numbers showed us, right? Gross fixed capital formation is the one which is doing all the heavy lifting as far as the economy is concerned. L&T is a big player in pretty much everything there. But Vivek is standing by with details. Vivek.
Well, you're absolutely right. So what's actually happened is that, like you mentioned, yesterday's figures are taken very positively in terms of what you just mentioned, in terms of the data coming through, along with that, the order win. But this particular development, in terms of the electrolyzer plant at Hazira is something that the street is taking quite positively. So what's actually happened? So, L&T has gone ahead and commissioned India's first indigenously built hydrogen electrolyzer at Hazira. This particular electrolyzer manufacturing actually has a power capacity of close to 1 megawatt, which is expandable up to 2 megawatt. The electrolyzer can produce up to 200 normal meter cube per hour, which is the unit that they use to go ahead and measure gas flow. So what does this particular move mean for L&T, and why is it being seen positively? Number one, the move enables product level integration as far as green hydrogen projects are concerned. Also allows L&T to go ahead and bid in global projects. Now, since this is indigenously built, it makes L&T's bids a lot more competitive, given the fact that prices will be something that they will be able to contain. Along with that, they can also bid, in domestic projects, especially in projects that are being planned by Indian refineries on a PPP basis. To give some context, this particular development foray was announced by L&T last year. They said that, they've gone ahead and tied up with a French company called McPhy for constructing these high-pressure alkaline electrolyzer plant. Along with that, they are making a gigafactory in France, and this is to be replicated in India. So that is what is happening right now. Along with that, all future technology upgrades by McPhy is going to be available to L&T on a service fee-based model. So positive development in terms of this particular, and along with the order wins that you're seeing.
Okay, all right, got that. Thank you very much for the details. Big move on L&T, indeed 4.5%. Prakash takes us back to that conversation, right? I always remember that. A couple of quarters back, we had that. Yes. And I don't know, maybe orders like these, the ones that they're talking about today, they will come at those better margins, which will take away the bit of the overhang that L&T has always had on it, right?
So I think they've already done enough good work with quite some impact on margin improvement. So if you look at their order book, 2 years back, their order book used to be, the executable yearly order book used to be in the range of about 12,000 to 18,000 crores. And there the margins were single digits, higher single digits or probably early teens. But last 1 year, they've been very clearly cherry picking only orders where the margins are mid-teens and above. Now, in this kind of a business environment, you could do it because you actually had no dearth of order buildup. And the lucrative orders from the Middle East that they have now started executing gives them a huge, because it's time bound. So it's going to be a very clear, this thing where you don't only get revenues into your books, but also kind of do it very timely. So I think that's it. This electrolyzer thing is a great move. I mean, otherwise there was this whole talk about relying on a John Cockerill or a Dean Ora, or, these were the smaller players that were into the electrolyzer business. But with L&T putting its weight behind this value chain, and Hazira, Reliance is out there, hydrogen is going to come through. So, it gives you a lot of optionalities. But at 3,600, I don't even think it must be valued historically. I mean, on a trailing basis, about 40 times. It's not something which you are overpaying for. So on days when, and yesterday, by the way, 2 days back, L&T was at 33, So it's just that you get these kind of moves from companies which are sounding boring. Now you'll have this in all Nifty stocks, whether it's the HULs and the ITCs of the world. That's the next round of interest that should come from a sector rotation perspective. But I think to answer your question, even at these levels, it makes great sense to back this up.
Okay, all right. Got that, Prakash. And as you said, you got a bit of a dip. If you participated, you'll be up close to around 8 to 9% just in the last few days. By the way, just one alert I want to put up. Reliance Industries hit 3,000 rupee mark. It touched that and then it's come off that. So the reason that the markets got that additional leg off is because Reliance Industries is the largest weight in there. It took that leg up, and in fact it moved high. It hit 3,000 and it's hovering around that mark. And we have Ashok Leyland's numbers that are flashing for you on the screen as well. There is a degrowth on a year-on-year basis, I think. but it's better than expected. Quick comment on this one, Prakash. Ashok Leyland holding at around 170 rupees odd. These numbers actually are looking a little bit better. I think it's a 3% beat in comparison to what we're working with.
But, still a degrowth.
Yeah. So look at Tata Numbers commercial vehicles also. That's the same pattern. So I think it's because last year there was a lot of restocking after the COVID recovery happened. 21 we saw the entire shutdown of sorts, and 22 was the build up. So 23 was restocking, which probably is where the numbers on a YOY basis look bad. But given the way things are moving on the export orientation and mining, Ashok Leyland benefits hugely from the MNHCV segment, which comes from mining. And if mining is to be, look at oil increasing prices, look at NMDC talking about higher output, look at Coal India all the time beating expectations on output. All this cannot happen without earth moving equipment, and especially the tippers that these guys can very easily supply. So I think, and luckily there's no race to electrify commercial vehicles at this point in time so much as just that segment of buses, especially with a lot of these corporations wanting to use the Electras and the JBMs of the world. But otherwise, I think Ashok Leyland has its sweet spot. It's weathered quite a bit of the storm. So you'll slowly start seeing a lot of improvement from here on.
If I ask you over the next 1 year, which stock will be a better mover, Ashok Leyland or HDFC Bank?
That's so chalk and cheese.
Both, not at all. I mean, from a, comparing them on a business perspective.
I know.
But just stocks that have been testing people's patience.
HDFC is the one that seems imminent. But if HDFC takes longer, because of the kind of heavy lifting that it would have to do to move even 10%, let's say, $150, it's not easy for HDFC in terms of market cap, whereas for Ashok Leyland, 10% is not even $200. So, that makes it easier. But I think HDFC is ripe for a re-rating of sorts. See, end of March, and these banks, private sector banks, will look very different. I can assure you that much. Because, we've overdone a bit of that. What happened to SBI? And then suddenly this, after the numbers, there's so much of love that's come back. It could happen to Axis, it could happen to HDFC, Kotak, ICICI, all of them.
There's NMDC who's talking about more ore being mined. So more ore is being mined by one of the miners. So therefore,
I think less ore has been mined this time.
I saw the wrong number. Sales are 3.99.
No, it's YOY.
It's more than...
both of you are right.
No, on a YOY basis, it's down actually. It's down 12%, the amount of production. But and also the sales numbers is up close to around 5%. So just looking at that. Okay. But in fact, as we're having that conversation, someone messaged me that actually even today the steel prices are lower. So what are they hoping for? I was looking at doing a couple of Google searches, and the hope is that next week there'll be stimulus announced from China. So I think that is the big reason of this big up move.
Absolutely. Well, we'll see. But Prakash, thank you very much for joining us.
My pleasure.
Great conversation as always. Thanks for dropping by, and enjoy Mumbai.
You have a lovely Saturday with the markets on too.
We'll get you in now that you mentioned.
Rubbing it in, huh?
All right. Well, we'll take a quick commercial break here. 360 points higher is what we have in the Nifty. We'll be back after a quick commercial break. More on, hospitals is the other pack which we want to discuss. Stocks are down once again. Max is down to about $700. Things like Yatharth Hospitals and a few others are all under pressure. We'll also have Jigar Mistry, co-founder at Buoyant Capital, joining in on the other side. Stay tuned.
Welcome back. Well, the markets continue to hold strong as we speak, and we're heading into the last 35 minutes or so. Just take a look at TVS Motors. You know, that numbers come up for you on the screen. It's not a cheap stock. You know, they're making some moves in the EV foray, and the street loves those numbers. Exports up close to around 85% on a smaller base. The headline number as well was up close to around 33%, I think so, if I saw those numbers correctly. And the stock is just flying away. The beat in comparison to our poll is around 4%, you know, in comparison to what we were estimating. But we almost have a 4% move on the stock, 3.5% in bulk of that move coming in the last few minutes. Metropolis as well as moved higher in the last few minutes. So there are stocks doing a thing of their own. TVS reacting to its numbers, spiking up. Metropolis pulling back. On the flip side, Whirlpool, you know, I think the global head said it, right? The stock is not very cheap, so they're taking some money off the table. Investors are here as well, taking some money off the table. Stock moves back to the low point of the day. Let's get in Jigar Mistry, co-founder at Buoyant Capital, who joins us on the show. Hi, Jigar. Good afternoon. Good to see you in. Jigar, I have to ask you about metals. What's going on today? Have you heard something? You know, 10 years ago or so, I would have called you in your earlier avatar on the sell side and said, Jigar, what's going on? And it's not even November when normally, you know, the conversations are very, very exciting because you're getting into that new year. People buy in November, sell in February, and you're packed up for the rest of the year. Have you heard anything overnight?
Hi, Nigel. Yes, and I would have told you 10 years ago that, you know, China, all the whispers have started again. They're trying very hard to sort of get their ducks in the row. Coking coal prices a week ago started firming up. Iron ore looks like it's going to go up again. Steel prices are not on the move just yet, but then that can happen at any point in time. Steels are cyclical, so might as well, you know, sort of buy the rumor and then sell the news. So pretty much how that conversation would have went, Nigel.
Okay. All right. So Jigar, hi, afternoon. So what's happening? You didn't answer the question.
Yeah. You told me what you told me 10 years ago. What about now?
I think he's saying that he'd say the same thing. Jigar, is that it?
He'd say the same thing. Yeah, Prashant and Nigel. Absolutely. So see, I think with a lot of these steel names, like I was on your studio a few weeks ago, and then we discussed that in the era of, you know, these sort of super cycles being taken away, all countries have created walls of their own. So essentially, everybody is now sort of trying to pinpoint what news you can trade. In that scenario, you know, given the flow of money that's coming in the sector, that's not run up a lot, not really expensive vis-a-vis its own sort of historical valuation. So it might make sort of sense to just play this out, looking especially at how the raw materials have moved. So I would say fundamentally nothing really changes. But yeah, sort of if China gets its act together, then there is some amount of money to be made with a cyclical name like this.
Okay. You know, we want to talk about hospitals next, right? I mean, stocks sold off yesterday. They are down sharply today as well. Now, this is a space where it's a secular kind of story, right? I mean, high quality healthcare services are going to be much in demand over the foreseeable future. And you know, most hospitals are doing very well. It's also getting more organized across the board. But the Supreme Court, of course, has stepped in. Regulatory interventions, remember, over the last couple of years were going down, but it seems to have sort of reared its head once again. And it's leading to nervousness. The Supreme Court is asking the center to kind of fix standard rates across procedures. And it's said that if you don't do it, we will do it. As an interim measure. Ekta is here with what the latest is, because I think Max, for example, is down from 900 to 700, and some of the others have also seen a 15-20% knock. Ekta, what's the latest?
Well, I'll start with Access, which was written on it. There was a blanket implementation of the CEA, Clinical Establishment Act, according to them, will be difficult. The possible outcome is that the central government proposes to the Supreme Court to form a committee of representatives from state governments. Building a consensus across various stakeholders could take several months, if not years. The overhang to remain on the hospital sector till some clarity emerges. Jefferies, they believe the litigation is at an early stage. It's unlikely to result in any near-term adverse outcome. Adverse news flow is not uncommon for the sector and has not always come into effect. CLSA, Supreme Court directing standardization of rates is negative for private hospitals, albeit difficult to implement, but they retain their outperform on Apollo hospitals with a target price of 7,000.
Ekta, you know, the court said that we will step in and as interim measure, we will prescribe rates. I mean, is that something which these brokers ultimately all this consensus happens and they decide on something, as you say? Some of them are saying it could take a lot of time, but this I think what's also caught the attention is the court is saying we will step in.
They are saying that they'll apply the CGHS rates in the interim unless the government moves in the next couple of weeks.
Yeah. So that's the big one, right? I mean, if the court steps in and prescribes, then, I mean, you can keep sort of arguing and building consensus, but the rates fall to the CGHS rates, which are sharply below what private hospitals charge right now. Thanks very much, Ekta, for that. Jigar is with us. Jigar, I mean, if you, I don't know if you own any of these hospital names, but if you owned any of them, and how would you react to something like this? Would you keep the faith that ultimately this will be resolved, or this is serious enough for you to exit?
No, we don't own any of these names, Prashant. But see, it's anything that gets into a regulatory hurdle sort of is very difficult, right? Because think of it, as far as the government is concerned so far, there has been a fair amount of understanding that they're trying to back off everything that can be market prescribed, right? So you look at increasingly, they are making a lot of rules very, very well known, and then they're just stepping back saying, we'll let the market take care of itself. But if it gets sort of into the Supreme Court trajectory, and then that directs the government on how things need to be addressed, then until sort of the situation is resolved, you don't really know how, the valuations react. So like we say, right, that all stories are basically the numbers of today and some story for tomorrow. Now, if the story for tomorrow does get impugned, then you don't really just depend on what the numbers for today are. So I think, but I think the bigger question, Prashant, is that how many of these sort of similar businesses are really there, wherein the greater public good, something or the other could emerge because, of some litigation that's going elsewhere. So I think that needs to be taken into cognizance as well. I think it would be very difficult for anybody to keep owning these businesses, keeping the faith on.
That's hospitals. Quite a bit of regulatory overhang there, given the statements that have come in from the Apex Court. By the way, this is the charge of the Light Brigade, really. 350 points on the Nifty. There's just no stopping. There's a full half an hour to go before the week and the day closes out. Actually, 2 more hours tomorrow. Correct. Week doesn't close out tomorrow. I stand corrected. But till, Monday to Friday at least close out. And that is a very solid looking screen. Jigar, hi, good afternoon. Just wanted to get your sense on two-wheelers because those numbers are looking very, very strong even now. Bajaj Auto's numbers, two-wheeler numbers, up 25%. We just had TVS numbers. They've done about 34% on two-wheeler sales. This is, February over February last year. And it kind of defies everything else that we keep hearing on, rural demand, etc. Because a lot of these bikes are being sold in rural areas and they're doing exceedingly well. Now, the question is on stocks, because stocks have also moved quite a bit. Would you still be a buyer? And let's throw in a word on CVs as well, because that's the laggard side of the cycle, and that doesn't seem to be picking up. So would you prefer CVs as a dark horse play, or would you stick with the winners in two-wheelers?
So no, I think a particular month number is sort of a base effect as well that one needs to take into consideration. But if you take the broader trajectory, then I don't really think we are into a zone where we are showing significant increase in volumes. What's happening is that the commodity prices have been benign so far, which means their contributions per vehicle have gone to almost historical highs. And the market seems to be forecasting both things, right? One, they seem to be forecasting that all incremental volumes. So if you take analyst estimates, most of them are projecting 80% of the next 5-year sales in two-wheelers will be EVs. So the market seems to be believing that all that EV will be equally as profitable as ICE, which cannot historically be true. Now, if you take a day like today, your Nifty, NSE metals index is up 3.5%, but at the same time, because of these numbers, the auto names are up as well. So I think given the disruption, given what's really happening, two-wheelers doesn't really fit the bill very well as far as we are concerned. CVs might make the cut, but again, given where you see the sort of staples demand coming through, there have been all 2-3% growth numbers. So I think even CVs, I think the best way to play this is through auto ancillaries, where you don't really see a lot of disruption play through. a lot of ancillaries are present across the spectrum, right? So CVs, sort of two-wheelers, and then you can pick up a bouquet of services that some of these offer and then play it through that. I think our historical play has been through an auto ancillary rather than the OEMs per se.
Okay, all right. Jigar, final question before we let you go. Simple question. What are the top buy calls? Name a couple of stocks.
Right. So I think banks per se, Nigel, are not looking too bad.
I was actually, Jigar, I was going to ask you about that call on Max because y'all had got it very, very right. I recall when you were explaining to us on a couple of shows, valuation-wise, it's in favor. The stock has done very, very well from there. And even after this rally, still valuation-wise is cheaper. I think a brokerage put out a note. If I'm not mistaken, I think the stock was at 600 when you were quite positive on this name. So fill us in with that, a view on that, and if there are any other picks that you want to talk about.
Right. So I think, yeah, Max Financial is also sort of something that I think the first show I ever did with Prashant maybe 7 odd years ago, or 5 years ago, was on the stock of Max Financial. And then we've continued to own that name pretty much since then. I think the first part of the play, Nigel, was the run-up because of a valuation differential. And then generally life insurance penetration has not really been very bad. And therefore, that sort of continues to be a reasonably decent play. In between number of budgets, sort of you have seen some things play out, other things don't. And then I think they continue to do reasonably okay. So that's a name that we continue to like. But I think increasingly, you're seeing a lot of private sector banks, especially the capex focused ones, I think are now in the focus. So 2012 to 2021, we saw all incremental lending happen through PLs or sort of personal loans. 2021 onwards, the capex cycle has picked up, but all of that is not yet funded through banks. And only now, that sort of funding is gathering the momentum. So I think capex-focused banks, corporate-focused banks are the ones that look the best. So those are the ones that I think we are getting a lot more overweight on now.
All right, Jigar, great chat as always. Appreciate you joining in and running us through that perspective. Thank you very much for joining us. Have a good weekend. But I guess you'll be working tomorrow. I think we've been
so will you.
Stumbling on that.
I think, we're just kind of still getting around to it. Acceptance will come. Eventually it will. Thank you, Jigar, so much for being with us today.
In case you're not working, Jigar, we are just telling our team to connect you. So tomorrow we'll see you on the show as well. 11 a.m. is when we'll like your views.
Sure. Thanks. Bye.
Okay, all right, Jigar, thank you very much for joining in. Well, we do have to take a quick break, but before we do that, well, here's a happy occasion that everyone is watching out for. We're talking about Anant Ambani and Radhika Merchant's mega pre-wedding bash that has begun at Jamnagar today. Among the bigwigs that have started arriving include the Piramal family. Anil Ambani also arrived with his family a while back. Then, of course, Bollywood is making its presence felt. Shah Rukh Khan and his family arrived. We'll just get those pictures up. That's Anil Ambani there for you. And of course, the King Khan of Bollywood, his and his family arrived in Jamnagar last evening to join the celebrations. Ranbir Kapoor and Alia Bhatt have flown in as well. While other high-profile guests attending the pre-wedding celebrations include Uddhav Thackeray along with son Aditya Thackeray and Deepika Padukone along with Ranveer Singh. So it's a star-studded pre-wedding bash. Cricketer Zahir Khan and his wife have also arrived at the venue a while ago. And of course, the celebrations will also feature a performance from global music sensation Rihanna. Welcome back. You're with us on Closing Bell, and we're still tracking a 350-point rally on the Nifty. Nimesh is here with all the buzz from dealing rooms today. What a turnaround, Nimesh, right? I mean, in the earlier part of the week, we were talking about correction, mid-cap issues, this, that. Friday's painted a very different picture, hasn't it?
Oh, absolutely. And what a great start to the March series, right? I mean, the Nifty is up 350 points. And again, you know, there is good leadership as well. So a lot of large cap names are helping the bulls to fight this big move on the upside. But if you ask me if this is led by very large FI buying, maybe the answer is no. There is a small MOC buying is what I understand towards the end at the leading FIs. But there is no large buying, so to speak, from the larger FIs. That's the overall feedback from a flow perspective. But I guess what's helping India to outperform across most of the peers is the strong domestic data, the GDP data, right? On back of that, a lot of the domestic facing sectors have done really well today. The metals are buzzing in trade. Looks like a short covering rally in metals, but banks too have been a big rally. The bank index is up almost 2.5%, and there's been a big surge as well. So towards the banks, at least I can understand there is a bit of buying as well. But broadly, I guess it's a large part of a short covering rally, and today's move is largely led by the large caps. But you know, the big question is, you know, how can we build on this momentum? That's something to track going forward. But today looks like a good short covering rally in metals and a bit of buying in the large cap names.
Well, that's right, Nimesh. You know, after a while, we are seeing that the Nifty has outperformed the mid and small caps for the week itself, because both those two indices are still in the red. So these large caps have done quite well. What about individual stocks, Nimesh? What do you have in your list?
Well, Nigel, you know, while the Nifty has done well today, in my chatter list, most of the stocks are part of the mid-cap and the broader market stocks. So the first name is DB Realty. That's been consolidating in a narrow range, but now I understand the company is very close to raising funds via QIP. So watch out for that going forward. The second name is Bombay Dyeing. Big move in that stock and large volumes as well. And I understand a domestic mutual fund has now started accumulating Bombay Dyeing at this level. So that explains a big move in that stock as well. The third name is Shyam Metallic. For the last couple of days, the volumes on the higher side, good amount of accumulation as well from HNIs, and there are strong buy flows as well from larger HNIs in the last many days. So that explains the move in Shyam Metallic. And the last is you know, the pharma names. Well, everybody is talking about hospital stocks under pressure. Purely from a flow perspective, both Cipla and Aurobindo are marginally ended down, but there is selling pressure from larger FIs. So expect high delivery volumes in both Cipla as well as in Aurobindo today.
Okay, all right, Nimesh, thanks very much for that. So that's the chatter as Nimesh is picking up. Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Rock solid, nothing being given back. So you'll end 350. I mean, not end, but there's still some time. But at least 300 points by the looks of it, since there's no looking back, no nervousness, no hesitation. But tomorrow is also, you've got 2 hours of trading tomorrow. What would you do, Mitesh?
So my sense is that I think, you know, on the index, carry on to your long positions, and even on the stock side, I have a BTST on HDFC Bank with a stop at 1423 for targets of 1450. And the other one is Bata, I think another stock which has been underperforming and is trying to reverse. BTST here with a stop at 1421 for targets of 1450.
Okay, all right, Mitesh, thanks a lot for that. By the way, Maruti's numbers were there. In comparison to our estimate, I think it's a 1 or 2% beat. On a year-on-year basis, I think the growth is closer to around 15% on Maruti. But that stock has moved up. It's that sort of a day, right? Mild beat, the market likes it. TVS, we saw it in Maruti, both those two stocks moving higher. And Eicher Motors, the CV part of their business, there's a mild 2% growth on a year-on-year basis as we speak. And that stock is, you know, holding with some gains, 1.5%. Yeah, that's a smaller part of the business. The bikes is the key driver of those earnings in there. But Hormuz, you know, trust him to come up with some interesting data on mutual funds playing the EV battery theme. Hormuz, take us through this electrifying piece, so to call it.
Well, you know, there are certain buzzwords that have been doing the rounds all these months, and one of them is electric vehicles. And there are a lot of components associated with the electric vehicles, and a major one is batteries. And playing that theme through two major stocks, which is Amara Raja and through Exide. Now, what we've gathered is that over the last 12 months, mutual funds, the domestic ones, have been steadily increasing their stake both in Amara Raja and in Exide. Now, you take Amara Raja first. From December of 2022, when funds had around around 1.3% stake in the company as of December of 2023. That has gone up to 6.2% at the close of last year. Some of the major funds there, Kotak Small Cap Fund has a 3.5% stake. Nippon India Multicap has a 1.2% stake there as well. Now, when it comes to Exide, they have domestic funds have a larger stake there compared to Amara Raja. In December of 22, they had around 10%. That has gone up to around 14% as of December of 23. Some major funds there is also Kotak, which is the tax saver scheme, which is around 5.5% stake. And Aditya Birla Sun Life and the DSP India Fund also have close to 1.5% in that. Now, when it comes to foreign investors, Amara Raja is the one that has a greater stake compared to Exide. Now, FPIs at the start of December 22 had close to 35.5% stake. That has come down as of December 23, but that is because the Clarios ARBL sold off their remaining stake in the company in a block deal that took place in July. And since then, as of December of 23, that stake is down to 24%. When it comes to Exide, the FPI stake there has remained largely flat. It was 11% in December of 22. It's close to around 13% as of now in December of 23. Now, what are these two companies doing when it comes to playing this EV theme? Exide is playing this through its subsidiary, which is Exide Energy Solutions, and they are pumping in the money there by the dozen. And they have so far invested almost 2,000 crore rupees in that subsidiary, and they are into supplying lithium-ion battery modules and packs with a 1.5 gigawatt hertz capacity, and they have a 700 crore order book which is going to be executed in the next 12 to 15 months. For Amara Raja, they have an initial, they are foraying into the lithium-ion battery packs manufacturing with an initial capacity of 2.3 gigawatt hour. And that capacity will be ramped up going forward, and they are going to undertake a capex of around 1,500 crore rupees over the next 2.5 years. Now, these two stocks, as funds have increased stake, the stocks have also done well. Amara Raja is up 50% over the last 12 months. Exide has been the outperformer. It's up 85% as well. Now, these are the two stocks, but anything related to EV, that mania is there on the street as well, because recently there was this IPO of Hexacom Telesystems, which is a developer of EV charging solutions for both homes and industrial enterprises. That IPO was subscribed over 130 times, and the retail portion was also subscribed over 100 times. Well, the mutual funds got it right this time, at least in the EV battery pack so far, and they have made money for sure.
Armaz, absolutely. Mania is probably the right word. The IPO that you mentioned, Hexacom, only 30% of their business, by the way, right now is EV charging. We're looking to grow it, but it's 30% as of now. 70% is charging solutions for mobile towers. But anyway, EV is the word, and the market absolutely loves it. Thank you very much for those details over there. Those are some sales numbers coming in. Right now, we have only the commercial vehicle and the export numbers for Eicher Motors waiting by to see what the two-wheeler business has done in the domestic market. We'll take a break on that note, come back with more in a bit. Welcome back. Tracking the last couple of minutes of today's very, very strong trading action. Now we're getting some updates on Coal India. Offtake is up 12%, 65.3 versus 58.3. Production never an issue, right, for the company, at least in the recent past.
No, production actually is okay, but I like the offtake. You know, because Coal India, they should produce more. The offtake was always a problem. They always had those bottlenecks, logistics issues, but the offtake number is looking good. This month, you need to note, I think it has an extra day, right, in the month of February. In comparison to the last February. But these numbers look good. The only now the point that we have to wait by is how are the e-auction prices shaping up. As we had covered earlier, 2 weeks ago or so, is that the e-auction prices as a premium in comparison to FSA had come down from around that 85%, 100% odd to around 45%. So that's going to be the key. But otherwise, these numbers look quite good. Sudeep Bandyopadhyay joins in, so I'll just take a query to him. Sudeep, your view on Coal India, it's been a big outperformer. From ESG concerns to India is going to be growing and we're going to require power, and so we'll require coal as well. You know, that's the way the narrative changed. At around 450 rupees, what's your view?
Nigel, you're absolutely right. I think we wrote off Coal India a little too early. And then we realized that, we will continue to need coal for the next 20, 30 years. And the demand is continuously growing with India getting completely electrified. Under the circumstances, the demand for Coal India is going to continue for the foreseeable future. Coal India production has been improving. Efficiency has definitely been improving. But the only challenge has been the e-auction prices, which have come down from about 135% premium to about 45% premium. That's a bit of a question. But even under the circumstances, I don't know what the premium numbers right now are. But at current level, considering what they are doing and considering the dividend payout and the valuation, I think Coal India can be bought for 1 year plus hold.
Okay, that's Coal India. By the way, the other story of the day has been an extremely strong move on the bank Nifty. We haven't discussed that enough, but 2.4% up on that index, outperforming the Nifty. Solid move by all the large cap banks, including an HDFC Bank, by the way, today. Leading from the front, of course, is ICICI Bank. IndusInd has been looking very strong. ICICI is up 3%, by the way. Big move on frontline bank stocks. Sudeep, hi, good afternoon. How do you read this? I mean, it's something that the market has been waiting for a long time. Now, if you were to put fresh money to work in, say, 2 to 3, big banks, PSU or non-PSU, which ones would they be?
Well, I think I will definitely pick up HDFC as one of them. I think the correction has been overdone there. And, I'm reasonably confident that post the March, when the numbers come out, I think market will be in for a pleasant surprise as far as HDFC is concerned. They have taken a calibrated strategy of not going for high-cost deposit and getting the margin deflated. And I think that strategy will pay off. They need to do deposit mobilization a little more. That's absolutely goes without saying. But by and large, the way the management has kind of explained this strategy, it makes sense. And I think it deserves a better valuation compared to its peers as things stand today. So HDFC will definitely be one of them. Then I can go and pick up maybe an Axis and maybe even an ICICI Bank. I think, the PSU, particularly the large PSU banks like SBI, I love SBI. I think that's a great bank and they're doing a great job. But I think the valuation has moved up quite a bit in the recent past. And at this stage, if I have to pick, looking at March numbers and, the March results are around the corner, I think I will go for, HDFC, ICICI and Axis.
All right. Sudeep, thank you very much for joining us. Short conversation today. Appreciate you sort of joining us. And, tomorrow's training. So good luck. Appreciate it. Well, I think some news coming in from the Met. But we'll need some interpretation of this. El Nino conditions becoming weaker. That's coming in from the IMD. So of course, the next big kind of thing is still a little further out. Of course, only in June, but monsoons, right? More heat wave days seen. Some more things coming through, but we'll have more context on this. The market will end 300 points plus, actually almost 350 points higher. The Nifty Bank will end 2.5 higher. Mid-cap index about 0.9 and the small-cap index about 0.5%. 0.5 plus actually is what you will see in terms of gains. Steel did very well. Tata Steel, JSW Steel, JSPL, SAIL. These were some of the big movers which started. Actually, it's not as if they all started higher. They started flat to even lower and then through the course of the day picked up pace and continued to move up. The metal index almost 4% higher in trade. Surbhi.
Well, if I look beyond the Nifty 50, then the metals theme was very strong. Look at us.